Hello, everybody. Welcome back to my channel. My name is Max. My channel's name is The Covered Caller. This is today's episode of The Daily Factor. The Daily Factor is my show where we look kind of behind the scenes of some of these ETFs on a daily basis, and we track their risk-adjusted return, and we talk about the different strategies they use and all that kind of stuff. All right, guys. Well, hey, Froggy, thanks for being here. Chad's in the house also. Thank you for being here, Chad. All right, let's do this. First of all, let's check out the market. I was just looking at it a second ago, see where Bitcoin is. It was going up last time I checked. I want a big gap up in Bitcoin. Monday morning, I hope it's, Bitcoin doesn't really gap because it's open 24 hours, but it'll make the products that don't trade 24 hours gap. Well, last time I looked at it, the half-hour chart was going up, and we were about 102.5. Anyway, now we're at 101.8. Anyway, all right. Well, let's check out old weekend Wall Street and see what weekend Wall Street's implying for an open. This is an overseas kind of like a bookie. It's not really a bookie, but it's I think IG is based in London. It's the parent company of Tasty Trade. Anyway, it's not related to the American Stock Exchange, but still you can trade it all weekend long. You can trade the S&P all weekend long in Europe. So, or all day long, in any event. All right, it showed that it's up 50 points right now. So we'll take that. We will definitely take that. All right, up 58 points, which is 12 basis points. So it says 71% of client accounts are short on this market. If you live in Europe, you can actually play the market over the weekend with this. I don't think Americans can do it. All right, but they give you a buy price and a sell price, otherwise known as a bid and an ask. So you could either buy, this is the NASDAQ, I guess, because you could either buy it at 47,137 or sell it at 47,082. Now, that's why you wouldn't want to do this. That's a gigantic bid and ask spread. If you just wait till Monday for NASDAQ futures to open, you could buy it at 47,137 and sell it at 47,136.5 probably, or something way more reasonable. All right, so let's see who the contestants are tonight on the Daily Factor. This is gold and silver Saturday night. All right, so we'll just go yield chasing. We'll start with the highest yield, GDXY. All right, well, GDXY, this is a Yield Max fund, paying a 48% yield. Let's go. We don't have very many tonight, so we're going to kind of check them out a little bit more. Let's look at GDXY here. Look at this. GDXY has 186 million under management. That's pretty good. Some of these gold and silver funds don't have nearly that much. This has been around since May of 2024, so about a year and a half. It was on a heck of a run, and then lately it's been kind of pulling back. I got rid of it on, which date I get rid of it on? Now, somewhere like about right there. I got out at 1520 or something. It's up a little bit from where I got out. Probably got out at exactly the wrong time. But in any event, I put it in. I invested this money in some other funds that are on the list tonight. So we'll look at those. All right. So that's our first contestant, GDXY. The NAV this quarter went from 1509 to 1560. So the NAV's still up on the quarter. Well, it's actually down a little bit. I'm sorry. Oh, I'm sorry. It went from 1560 to 1544 this quarter. So the NAV's actually down a little bit. All right. Well, the next one on our list is GLDY. This is from Defiance. This is based on the GLD, which is a gold index. So let's check out GLDY. Let's see if it has as much money under management as GDXY. I don't think it does, but I'm not sure. Let's just go check, see how long it's been around. I think this came out this summer, or no, this came out about. This came out, I guess, about this summer. Yeah, I think it did. Let's see. Well, no, it actually came out in the spring. It was out April 2nd. Assets under management is just 30 million for GLDY. These guys sell puts on the GLD index, and they sell either at the money or sometimes in the money puts. And in the money puts, the same thing as a covered call. You don't even need stock. You just sell an in the money put on the GLD, and it's the same exact trade as if you would have gone out and bought shares in the GLD and sold a call at the same strike of the put, of the naked put. So you can buy a call. I mean, you can buy the stock, sell a call at whatever strike, or you can just sell a put at that same strike. It's the same. It's basically the same risk, same reward, same upside, same everything. So, and that's what these guys do. That's what these guys do. These guys sell puts. All right. So let's go back here and see. Now it's paid a 47% yield. The NAV went from $17.24 to $16.94, down a little bit. Sure enough, the highest yielders are doing the worst on NAV. Go figure, right? That's just the way it works. It's math. Silvo, SLVO. Now this one yields a lower 17.38%. It's based on silver. Let's go look at Silvo. I think I had it open. Maybe I shut it. So let's go look at this thing, see how long it's been out, see what it's up to. It's from UBS. They call it the Silver Shares Covered Calls. So they sell covered calls on the SLV, which is a silver ETF. Probably an SLV probably owns silver futures, and they turned it into an ETF. Man, that chart looks good. And this thing has 234 million under management. So there's a lot under management with this. Now, it's been out since 2013, so they've had a lot longer to get that money under management than something like GLDY that's only been out since April 2nd. So, but in any event, this is a pretty decent sized fund for the ones we're going to look at tonight. All right, so now we're going to check out the price. This thing went from $83 to $91. Heck yes. Even if you look back a year, it went from $78 to $91. I mean, it's up 9.25% on the quarter. Wow. All right. So now let's check out a little iGold. Now this one's a big one also, and I think it's one of the older ones. This is a covered call fund. They sell covered calls on the GLD, which is gold, which is a gold futures index, iGold. And this is from First Trust also. Or I don't know also. I thought we had another one from First Trust, but I was also looking before the show started. I may be getting confused, but let's see here on iGold. Okay, now this thing, yeah, I did look at this before the show started because I was looking at the AUM, and this one has the most AUM, 385 million's not too bad. Not too bad at all. Look at that. Look at that. That growth on that chart there. And these charts don't factor in dividends. This is not including dividends. And you can tell that by typing in something that pays really high, and it'll always slope down and to the left. I was trying to think. We could type in Misty, but Misty's sloping down and to the left because of Mister. But something like Alti, its underlines aren't in as much of a bear market as Mister's underline. Mister's just getting killed, but Alti's underlines aren't doing great. But yeah, if this was a total return chart, Alti's up on the year, not very much, but I mean it is up, and it would have a slight slope to the right. There's no way to change the setting on here, I don't believe. So anyway, that chart of iGold, that's what makes it really that much more impressive, because that chart is going up and to the right, doesn't factor in dividends. I mean, it shows you down at the bottom, where you got the dividends, but it doesn't factor it into the equation. So iGold's going to be tough to beat. It looks like to me. This thing, if you can deal with 15.68% yield, but that's really good. All right, so let's go back and look at the prices. Let's see, on iGold, yeah, this thing went from 21 to 25 this quarter, or basically 22 to 25 and a half. That's still, I mean, that's up 16% on the quarter. That's got to be the winner. There's no way anything is going to take that tonight anyway. We'll see, though. Now we have Gold Eye. These guys also sell covered calls on the GLD. All right, so let's check this out. Assets under management's 121 million. Well, you know, about a third of the last one we looked at. Now this is from UBS. So 230 million. Chart's going up and to the right. I mean, that's good. So that one's, so Gold Eye is from UBS and iGold is from First Trust. Okay. All right. So but they both look decent. Now let's look at Gold Eye. So on the NAV, it's gone from 160 to 169. That's about a 5% move up over the past quarter. Not bad. All right, now let's look at IAUI. I think this may be one of the smaller ones, but it's also, I think, just getting started. Just as this iGold, we didn't look at the IPO date, but it's been out since 2021. And said, you know, and Gold Eye has been out. This is the one we didn't look at the. Gold Eye, yeah, this one's been out since 2013, and it has the most AUM. Okay, so now let's look at IAUI. Now this is from Neos, of course, Neos. So this is called the Neos Gold High Income ETF. A lot of people like Neos, me included. They do a great job. Charts go in the right direction. Of course, gold's been going up too. So, so this thing has only been around since June of this year. A lot of people jumping on the gold bandwagon as they saw gold getting more popular. I think it was probably a good move. Now, this actually has 174 million under management. This could be a good one as well. Let's look at the price action. It's gone from 49.30 to 53.72. That's not bad. It's up almost 10%. Then we have K Gold. This is from Curve. This is a Howard Chan special here. Now, it pays 11.5%. It's gone from 24 to 28. So that's about a 16% NAV upside. Now, unfortunately, the yield's on the lower side, but let's check it out right here. Curve Gold Enhanced Income is what they call this one. Alabama's beating LSU 10-3. I'm watching the ball game right now. All right, so this thing only has 32 million under management, but it is pretty new. It's only been out since July 9th of this year. Now let's look at the prices. This thing went from 24.37 to 28.28, about a $4, almost a $4 improvement in price over a quarter, 16%. That's our NAV upside winner, but it is the lowest yield. So that kind of makes sense to me anyway. All right. Well, which ones are you guys' favorites? Are you guys pulling for any of them in particular? Mendoza will win the Heisman. Yeah, possibly. Shout out to IU. That was and I actually had, I watched part of that game, but then I turned it over to the Iowa State game. I was watching Iowa State. Oh yeah. But anyway, it was, what about YGold? What about YGold? Let's look about YGold. Gold Y, or there was one that was too new to be on here, and it may have been this one, or there was a couple that were too new. Gosh darn it, this isn't one of them, though. You got to be freaking kidding me. Are you serious? How could I freaking miss this? Gosh darn it. Oh my gosh, I'm sorry. Yeah, I guess it's maybe not on here or something. I probably just missed it. Let me put it on here really quick. I'm sorry about that. But yeah, what about Y Gold? All right, it takes just a second to load, and then let me copy it over. We need that. We need that. We need that, that, and that. And we need this. Yeah, this is a good looking one. Thanks. I'm sorry about missing that one. And we need this, and we need this. All right, my apologies. Let's just copy and paste it into the show. We'll just put it on the spreadsheet. It won't be in the graphic, but it'll be on the spreadsheet, and we can figure it out. All right, so there we have Y Gold. So what about Y Gold? First, let's look at it right here. So I guess I already have it pulled up. Y Gold. Okay, so this is from Simplify. Boy, the chart looks good, right? Up and to the right, it's been out since 2024. Unfortunately, the yield's only 3.92%, but I mean, depending on how stable it is and depending on, what the price, looks like and the NAV return looks like, this could be a good one. It's up 75% year to date. My Lord. All right. So anyway, let's go back here. This has all the same numbers. So the price went from 34 to 42. Quarterly NAV return is 23%. I mean, that's on fire. That is absolutely on fire. Now, it's on the riskier side, but we'll get to that in a second. Okay. Wow. Okay. Well, thank you. Thank you for that. So there's Y Gold. So those are our contestants, unless there's anything else I missed. And I'm not putting GL, the one that's Bitcoin and gold isn't going on there. Y Gold pays quarterly, plus it's a small dividend. It's probably why it wasn't on the max factor, but it doesn't mean it shouldn't be on there. But the quarterly ones, if people don't talk about it that much, and I haven't, thought about it, it won't be on there. So what's BABC? Is that another one I missed, or is that something else? So you just gotta, this one I checked and it's way too new. There's two of them that are too new, but I checked and so anyway. So what about 3 current interviews? What are you talking about, Jeff? Anyway, I got Y Gold. I'm sorry about that, man. I am sorry about that. Chippy's holding up. All Michael wants to do is add more funds because they have zero solution. The NAV drop. Yeah. And the NAV drop falls squarely on Michael's feet. Well, I mean, because the NAV drop in the high yield funds is because of the NAV drop in micro strategies. But anyway, hopefully they'll turn it around. Bitcoin's off 20% too. But I will say this, the last time Bitcoin was going up, Mr. didn't participate either. So, I mean, so I'm with you. I will say that stretch looks really good, though. That stretch looks really good. All right. So let me just make sure I didn't miss anything. Silvo doesn't allow drip. Yeah, I don't really factor in drip anyway. And I agree with that. Sailor is a car salesman. But I mean, he's made a lot of people a lot of money, but how long will that go on for? Charleston Jeff in the house. Okay. I thought you were Baltimore, Jeff Taz, but anyway, whatever. I'm just giving you a hard time. Okay, so I think I got them all. So let's just check this out, and then we'll see where we're at on the comments. All right, so let's get back here to the to the handy dandy graphic. Okay, well, let's look on quarterly NAV. We've already kind of checked this out. The best NAV return is Y Gold. It's 23%. I just remember that from the last one. This one's 16%. Now, Y Gold only has a smaller yield, but it gets tons of NAV upside just because of math. I mean, that makes total sense to me. K Gold does great on NAV upside also, but it doesn't pay quite as much yield as Y Gold. And we'll look at the stability in a second, but in any event, Silvo does a nice job. IAUI is doing a nice job. GLDI is doing a nice job. I mean, heck, Silvo's paying 17% and getting, 9% NAV upside. So, but let's look at the stability indicator. So this is the relative. This is I'm going to rename this relative stability, but this is the stability relative to the market. iGold 70% is stable or as volatile as the SPY. K Gold is about twice as volatile, because it's half as stable, let's say. So it could be called twice as volatile. Anyway, so out of them, let's just go from the least stable to most. The least one's GDXY, and this makes sense. GDXY, the miners are like, they have exposure to the gold, but it's indirect, and they have leverage built in because they're mining the product. It's not just it's a different kind of, it's a little bit different strategy. And it's based on stocks. Stocks, have more volatility oftentimes than commodities. In this case, especially. The ones that are based purely on commodities, you can see are these other ones, and they're based on the GLD index, which is just the commodity. They own gold futures. And you can see these ones have anywhere between, they're about half as stable as the market and all the way up to almost as stable as the market in IAUI's case. Now, Gold I is a stability champion. It's 1.2, it has 25% more stability compared to the SPY. Lots of relative stability on Gold I. And now we have to jump over here and look at Y Gold. And now Y Gold's stability's on the low side. But it gets all that NAV upside, but it's about a third as stable as the broader market. Okay, so let's get back over here. All right, so sustainability is the new max factor. It's the same formula. I'm just this because obviously the max factor wants something that's sustainable. Is looking for sustainable yields. The only thing that's changed is, and I changed this on the long-term max factor also, is the max factor is now sensitive to taxes. So it factors in your after-tax return, and it makes a difference, especially in funds that pay a lot of the return back in the form of yield, in the form of yield, because yield is taxed at a higher rate than NAV upside. In fact, NAV upside is not really taxed until you retire. I mean, it is taxed, but it's deferred, but the yield is taxed every time it comes out. So it's important to factor that in. So in any event, let's see what we have. Well, I'm just eyeballing it. It's got to be iGold, right? I mean, 70% as stable as the market. It's yielding 15%. The NAV's up 16%. I mean, it's got to be iGold. I mean, you can see it right there. Anyway, let's check it out. So yes, it is iGold, and that makes sense because it has tons of stability, and it's combining it with tons of upside. It doesn't pay a high yield, but it pays about the same yield as Gold I. In fact, it pays a little bit higher yield than Gold I, and it has 3 times the NAV return compared to Gold I. Now, granted, Gold I is a little more stable, but not quite twice as stable, but yet iGold pays 3 times catches 3 times as much NAV upside. iGold's the definite winner here. I don't think there's any question about it. Silvo does a nice job too, paying the highest yield out of the reasonable ones. These ones down here, out of the group of the lower paying ones. In the lower paying group, it's the highest yield. So this one could work too. I mean, this one could definitely work too. Then we have Gold I, super stable, a little bit too stable though, because so stable it's not really getting a whole lot of upside. Lots of times the funds that don't get a whole lot of upside sometimes don't get a whole lot of downside either. And so that's what makes it, it can make it more stable. Anyway, IAUI might work too. Look at IAUI compared to Silvo. It's getting about the same upside. Now, unfortunately, it pays, about 20-30% less yield. In any event, K Gold is a good one. I mean, tons of NAV upside, not that much yield, and it's on the less stable side. In fact, of the lower paying ones, it's the least stable. But it has it's getting the most NAV upside. Just depends on what you want. But that's why iGold is kind of the full picture, because you get stability, NAV upside, and you get yield. Now, these ones down here, the reason they aren't ranked higher, for one thing, the negative, that because their NAV didn't do as well, that's part of the problem. And in GDXY's case, it's also, less than half as stable as the winner, and it had negative NAV. Although it wasn't that negative, GDXY could still work, but it's going to be on the riskier side. And then we have GLDY is also down here. But now let's look at Y Gold. Y Gold is at 2.1 on sustainability. So anyway, let's go back over here. Y Gold right here is at 2.1. So it would be between K Gold and GDXY. So I think a lot of those could work. The ones that interest me are K Gold, obviously, because I have it. Disappointed it's not doing well, but I'm happy it's catching so much NAV upside. But I'm feeling kind of stupid for not having iGold, because iGold's catching the same NAV upside, pays a higher yield, and is twice as stable. Half as volatile is another way to look at it. So maybe I need to look in getting some iGold. But I also have SLVO. I have K-Silv, which is too young to be on here. So I have my silver. I'm hopeful that once K-Silv gets on here, it'll be as good as SLVO. We'll see. Now back to the Y Gold situation. What hurt Y Gold is the 4.2% yield. I mean, yeah, it got a lot of NAV upside. It got, it looks like about 20% more NAV upside than the winner, but it only got less than a third or maybe a fourth of the yield. And you add on top of that it's the risky, it's on the riskier side. And I think that kind of explains why it's not on there. Sorry, it wasn't part of the graphic. We could talk about anything you guys want to talk about. Put Max in the comment if you want to talk about it. I'll scan through here really quick, see if I missed anything. But we can look at anything from the Max Factor. If you want to look at something else, we definitely can. All right. What is going on? Is Chad, are you talking trash in here? I know, but the YouTube people act like there's anyway, all right. All right. So Silva, I'm sorry to hear Silva doesn't allow drip. Who would not allow drip? Why would, I don't get that. Why would you think it'd be in the company's interest to drip? This is 2025. Drip got it. I've been dripping stuff since a long time. Okay. Yes. Oh yeah. Well, I'd agree with that, but anyone that watches any of these shows should know that, there's a lot of people out there, not just me, there's a lot of people that do it better than me even, but that explain exactly, that how yield works and stuff. But yes, it doesn't help, because the first thing a newbie does is he goes to a chart and he goes, oh, this thing sucks. Yeah, because they show it by default. In fact, FinViz does the same thing. This is by default, no dividends included. Can you imagine how well Y Gold would be doing with dividends included? But actually, it wouldn't be doing that much better, because it only pays like a 3 or 4% dividend. But it would be doing somewhat better. But on the ones that are paying 50, 80, 150, 200, 300%, yeah. And that is part of the issue. But to be fair, though, those guys don't, I think they're if you talk to them, they say, we're going to err on the side of caution. We aren't going to, that's what they're going to say. And plus, they don't want you investing in these. They want you investing in their boring products like SCHD or whatever. And I'm not saying there's anything wrong with SCHD. It could be a good fund. So let's look at so some of these funds have been out a long time. Let's look at like Y Gold versus something here. Let's get out the dividend calculator. Let's look at like Y gold versus I gold. It's kind of the story of two different things. I mean, I would think I gold would spank it, but maybe not. We'll see. We'll see. We'll just go back since inception on these because they've been around for a while. All right, I gold versus Y gold. And Y gold's a total return champion because it's giving your money back. In these funds, you have a choice. This is your own money. You worked your whole life to invest it. If you invest in a fund that pays a huge dividend, you're going to be getting, or advertises a huge yield, let's say, more of your money is going to be coming back to you in the form of income, and taxed at the higher rate. That's also probably why Y gold didn't do as well on anyway, forget about that. But you can also make the choice to invest in one like Y gold that advertises a lower yield, and then other things being equal, you should get more of your money back in terms of in NAV. But yeah, this is a great look for Y gold. Now let's run it over the past quarter. Also remember, the max factor doesn't go back since inception because this is a trading index, so it also picks up momentum and that kind of stuff. And so you can do that one way by not looking at too much data, by limiting your data set. But yeah, this thing's that's a good look for Y gold right there, to be sure. You can visibly see. Remember, I said it's like 3 times as volatile as the other ones, or 3 times as volatile as the market. You can see they both follow gold to some degree, but look at the ups and downs, the difference in the ups and downs. I'd say it's about 3 times, which is what the numbers say also. So yeah, that's Y gold's a good one. Thank you for telling me about that. All right, what else is up? Well, let's see, share price. Yeah, there's nothing wrong with the share price. Is good. From a tax standpoint, share price is better. That's why I always say, if you have a job, you're in your prime earning years in your 40s, you're in a high tax bracket because you have a job. Well, don't mess with these. If you want exposure to gold to protect against inflation because the government prints money nonstop, that's fine, but just go buy GLD, and use your job to support yourself. But the main reason of that is because GLD, your taxes are deferred until you retire. If you get I gold, Y gold, or whatever, especially I gold because it pays 17%, then you're going to lose that's ordinary income, and you're going to lose if you're in the top bracket, which it'd be nice if you are, or whatever. If you're in your prime earning years, you're in the top income bracket. Maybe your wife works too, and you guys, you're in the top bracket. Well, you're going to lose 37% of your distribution. So that's why for a young person with a job, it just makes a lot more sense just to buy GLD or GDX, buy the parent asset. But as you get older, especially if you're retired, you aren't in the highest tax bracket anymore. Your income goes down when you retire. So then that can be advantageous. But also that's what the stability factor also factors in. It's factoring in the after-tax return. So some of these ones that pay a giant yield also have a giant tax liability, and yield lots of times is a tax on the future NAV upside. So that's why I'm always preaching, if you're young, just get the underline. If you're young, just get Mr., instead of Misty. If you have a job, because in theory, if you have a job, you really shouldn't need the income, and these don't make the best investments, especially when you consider taxes, especially if you're in the highest tax bracket. But there's different strokes for different folks. There's certain situations that can make a lot of sense. I definitely don't have all the answers. Yeah, you're right. Chippy for sure doesn't suck. I agree. Big Y is really good also. So, but anyway, it's to each his own. I mean, to some people they suck, to other people they're just great. So it's all good. But I agree with Saylor being a used car salesman. And I like his interviews and stuff, but he's a promoter. His job is promoting that product. You could say the same thing about lots of Wall Street guys, but he's a really good example of a promoter. Anyway, let's see. Taz with the hot takes. Yes, sir. Taz is full of hot takes. All right. Was BABC something what is BABC? BABC, is that? Let me look at that real quick. I hope that's not a gold one that I missed. Oh, no. BABC. Or no, that's not. I mean, that's nothing. That's a company called Babcock, but there's nothing called BABC that's in here anyway. There's a BABA, BABX, BAC, BACC. Anyway, maybe you guys are talking about something else. I'm getting in on the middle of the conversation. Just put Max if it's for sure something that you want me to address, and I'll kind of skim over it if it's just you guys talking back and forth to each other. GLDW is weekly on GDXW. Yeah, so they're GLDW is weekly gold. GDXW is gold. So does anyone have those? And are you guys happy with those? I think that's what I checked. I checked GLDW, and it was too young to be on here. Both of them were. I did check. I tried to make sure I catch all of them. I can't believe I missed Y Gold. It'll be on next time, though. Once it's on the Max Factor, sometimes the funds slip through, and I don't put them on or something. Oftentimes the fund's too new, and I know about it and I intend to put it on, but then, 3 months later I forget or whatever. So we can see what's going on the Max Factor next and the new ones that are coming out on the Max Factor. And what we do is we slide over here. They're the ones in red. IETH, October, so November, December. This one's going to be on the Max Factor in January. AMYY is going to be on the Max Factor December 16th. BITK is one I have myself. That's going to be here December 24th. Anyway, you guys see WPay. I can't wait for WPay to be on here, and I want to compare it to YMAX and all the other ones, but especially YMAX is the most natural comparison for WPay. Then we have ETTY that's going to be on here in January. Then we have SMCC 9, 10, 11. So this is going to be on here this month. 11, so the 20th, right around Thanksgiving. MAYY, that one is, I'm trying to think, is that, I know it's a Granite shares because of the YY. I'm trying to think what the underline is. Is it Mara or is it, well, let's look at that. Someone was talking about the other day, and I thought maybe it was like, I thought it was like AMD, and but that doesn't make sense. It's got to be Mara, right? Well, it's not even here. MAY. Maybe it's AMYY. Maybe that's a typo. Yeah, that's the one I saw people talking about the other day. You were just thinking about, Chad was just thinking about the gold Bitcoin ETF. Makes sense, doesn't? Oh, yeah. I don't think it pays a yield either. I think it's growth only. If it does pay a yield, it's probably quarterly and it just pays, it's not I don't think it's a regular yield. Oh, you're referring to the Marcos. Oh, with Michael yesterday. Okay. Yes. I saw a Twitter post about that and I watched a few minutes of it, but I've heard all that stuff so many times. I got bored and turned it on something else. But anyway, so, but yeah, it was, I mean, Marcus does a good job. He's well prepared. I like his graphics. I'm always jealous about what a good job he does preparing, and he's well spoken, well poised for only being 25. Didn't he say it's his 25th birthday? I think that's what he said, or his 25th birthday was yesterday or something. And you're talking not about Michael Saylor. You're talking about Michael Coe. Okay. Well, I don't agree with you on that, but I do agree with you about Michael Saylor. Now, Michael Coe I followed him forever. He's he's like a professor. But anyway, I didn't see the whole interview. So, I mean, I get you. I'll watch the whole interview. Then we can talk about it later. Yeah, I thought we were talking about Saylor. Now, Saylor's kind of that. Saylor's definitely a promoter too. I wasn't talking about Michael Coe. I hope people don't think that. He's because because I have met fund managers that are like that, but I don't know. But that is his goal. He's the brand spokesman, and he knows his stuff. Some people are just, you can't. There's two kinds of people in the world. There's people that count distributions as money, and then there's people that's like the distribution. It's like they have a trophy wife, and she, as soon as their distribution comes in from Alti or Misty, she goes to Saks and spends it that day before. So it's like, damn, I have these high yield funds that aren't making anything. Well, yeah, if the distribution's going out the doors, if you don't count the distribution, of course, yeah. But a lot of people, they reinvest the distribution, or they use it in retirement, or so the distribution is a crucial part of the puzzle. But anyway, if you're one of those people that don't think distributions are real, or they don't count as income, or they don't count as money or whatever, yeah, and there's those people out there in the world, and that's fine, but they're never going to like YieldMax. But doesn't mean they can't get high yield funds. There's ones out there for them. I'm thinking Curve, just find the ones that pay about half the distribution of YieldMax. But yeah, I think that's all it is. It's just a basic misunderstanding about what money is, and and if distribution counts as return or not, and like I say, if you have a hot trophy wife and you have $1 million worth of Misty, and you're getting $50,000 a month, and she spends the distribution when it comes in, or Alti, or whatever the high yielding fund is, no matter what it is, and she spends it, so it's gone, and all you're left with is the price of the stock. Yeah, then of course you're going to hate. YieldMax, and of course that's kind of an extreme example, but that's the way I look at it. But that, like I say, if you're young and you hate YieldMax, well, that's good anyway, because in my opinion, you should stay away from all of these funds. If you have a job and you're young, work and let your job pay the bills, and then just invest in the underlying, and then so it grows tax free, and then you get richer, then so you make even more money. So yeah, I think the people, in other words, I think that's the people that hate YieldMax, if they're young, I agree with them. I agree with their intuition, maybe not their reasoning, but anyway. So too bad no one has an inverse Alti. Yeah, there's Salty. Who do you not know about Salty, Chad? Oh, well, it's not an inverse. It's a short fund. What's basically an inverse Alti? It's meme stocks. They choose the highest yielding meme stocks that they think will go down. I told them it should just be a direct inverse. I mean, I don't know why they don't just use the same stocks, because but anyway, but they use different stocks. Like I always say, they don't ask me to make questions. To make questions. They don't ask me to make decisions for them. Oh, I got you. Okay. Well, that's a good point. I see what you're saying here. All right. Well, anyway, we'll try to be nice and respectful to each other. But I have sour grapes too on stuff. I have sour grapes on lots of investments I've made. Sometimes you just have to, I'm trying to think of a good example. I have sour grapes on penny stocks. I'll never touch one again in my life. I bought one once, or it was a cheap stock for like 50 cents. It's called Beverly Enterprises. It was supposed to be the greatest thing ever. And it was like a 50-cent stock or whatever. And it was cheap. I was young. And so I bought probably more than I should have, because I was thinking about how much I could make if it goes to $5 or $10. Well, I wake up one morning and it's at $5. And so I'm like so happy, and I'm going through the Sharper Image catalog. This is back when they had catalogs. This is in the 90s. Going through the Sharper Image catalog, and I'm seeing how much the massage chair cost. And I'm figuring out if I have enough shares to buy the massage chair, and I'm all excited. It turns out it was a reverse split. And I found out that it was a reverse split before. But anyway, and so I will never buy, penny stocks. Anyway, but yeah, I'm salty about stuff too. Okay. Yeah, SoCal Steve has a lot of good videos. I haven't watched the video on YieldMax. I think he's on the doesn't like it as much, but that's fine. I watch people that love it and watch people that don't. I just didn't have time to watch Marcus's. I knew the answers. I know all these things because it's the same thing. It's the same stuff that I tell people. My code just says it in a more professional way, because he's a professional, and that makes sense. I'm just a guy on the internet. Although I was a broker, but being a broker and being a minor wealth manager in a small Midwestern town, that's very minor compared to these guys that have actually been market makers on the exchanges and stuff. And Mike Coe, and speaking of Mike Saylor, I don't know if Mike Coe knows him, but like Jay and Mike Venuto have been on conference calls with Michael Saylor and probably a lot of other CEOs. But yeah, those guys swim in a different pond than we all do. All right. So what is going on? All right. You guys are just talking to yourself. Let's see. Salty. No, Salty does not. Oh yeah, actually it does. But it's short stock and sells out of the money puts. So it's a reverse covered call. A covered call is long stock selling out of the money calls, generally out of the money. You know what I'm saying? So yeah, it's a reverse. But they don't sell puts in the same way that Granite Share sells puts. If you sell puts by itself, that's actually a bullish play. But if you short stock and sell puts, that's a bearish play. Or it's neutral to a bearish play. But you want either stable prices or lower prices. Yeah, not in the same way as Alti. I agree with that. Yeah, what's the matter with used car sales? One of my best friends, Robbie in Oklahoma, I grew up with him. He's not a used car salesman. He's a car salesman. He sells whatever, and he's a great guy. So yeah, we're giving car salesmen a bad name. And I was talking bad about Michael Saylor. I mean, I like Michael Saylor. But that's who I thought you guys were talking about right now. Yeah, I think that it should be a direct inverse. No, I never got on the floor. I just worked in, the closest I got to the floor was the trading floor of I worked in Oklahoma, but a couple times for training and stuff, each firms have their own trade desk. And I went down to our trade desk at my firm's home office or their regional office in Dallas, and I got to meet people. I was there the day that the Dow hit 10,000 for the first time. So I think it was 94, 95. I was there for some continuing education, but no, heck no. First time I've ever been to the floor is when I made a YouTube channel, and then Yilmax invited me to the floor in New York. It's the greatest thing. It was one of the best days of my life also. It's absolutely incredible. But no, I'm just, there's a big difference between what Mike Coe does and what a retail broker does. What a retail broker is basically a used car salesman. I mean, you want to be honest, retail brokers are the guys that sell, nowadays no one even has a broker. I don't even know if you young guys know what one was, but in the old days, you had to have someone to buy stock through. You'd have to call them up, even if you wanted a price. I'd call them up and say, hey, what's the price of Beverly Enterprises? And I did once I got the internet. Once I got AOL in like 93, I could also look at prices, but they were delayed and slow. But in the late 80s, when I first started, you'd have to call up, okay, what's the price of Beverly Enterprises? All right, and they wouldn't tell you in cents either. They'd say it's bid at 3/8, asked at 9/16, and you had to know fractions. But then if you wanted to do an option, you wouldn't do one on Beverly Enterprises because they didn't have one. But I had some stock in Eli Lilly, and I sold covered calls in Eli Lilly. So that's a big company that had covered calls or that had stock. So I'd call up, hey, I want to sell some call options. I want to do a covered call. And, Lilly's trading it. Can I get a price on Lilly? Okay, it's bid at, or it's 50 and a quarter. Okay, 50 and a quarter. Let's see, which options do you have available? Okay, and it may have been March. Okay, well, we have the June 60s. We have August 60s, 70s, and 80s. The strikes would be super wide, and they'd be, you get a very poor selection of strikes, and you'd have to call up and do it on the phone. So what you'd usually do is you'd read the paper the night before, and the paper had the options tables in it. So from there, you could figure out, hey, I'm looking at the 60 call for Eli Lilly for the July, and they would say, okay, that's bid at 2 3/4, asked at like 3 1/4 or something, a $50 wide spread. And if you do 10 options, which I used to do back then, it'd be, you're paying $500 plus. Then guess what? The guy on the other end of that phone, he gets a commission. So anyway, I figured out that the only guys making money in the market were the guys on the other end of that phone. So I went into, plus I like to help people. And so I went into being a broker myself. But yeah, you guys don't realize how good you have it. With, you have strikes at every dollar, free commissions, the bid-ask spread. Well, one thing, you don't have to know fractions. I was always good with fractions, but I'm saying a lot of people weren't good with fractions. You don't have to know fractions. Now you call up on Eli Lilly, you have strikes probably, depending on what price it is, it's really high price. So it's probably every $5 strikes, but you have them, expiring this week and then next month and the month after that and the month after that. I mean, it's just, it's incredible. But that is what I did was basically a used car salesman also. Hey, Chad, thank you so much. I appreciate that super chat. All right, GUI made the number one in the short max. Yes, let's look at that for anyone that didn't catch that. Let me just, should we pull it up here? I mean, let's just, not very many people watch that show. I always said that the recorded shows do better, but I'm not so sure anymore. I think maybe my live shows are doing better. The new max factor, there's the Google Sheet. Let's go to downloads. Let me find it out of here. Long-term, short-term. All right, so top 20. I guess we have to hit reveal. Let me just hit reveal a bunch of times until it gets up there, and then we'll just take a look. Okay, yeah. There you have it, GUI. I mean, you have yield. You have stability. It's half as stable as the market, which isn't bad for a single stock. I mean, it's 45% as stable as the broader market, but you're getting yield and you're getting NAV all day long. But it's also because Google's on a tear. That's why I don't look at the single stocks too much, because you have to be good at picking a stock. If you can look at something like Triple QI or SPY or Triple QY, or my favorite one lately is QYLD, or as you know, guys know, I like ULTY. I like K yield. Anyway, but the ones that are based on multiple stocks they don't have as much of a wild card. Even if you get GUI, hey, it's number one of the max factor and it's great. Yeah, it's great as long as Google goes up, So anyway, I just don't like that, the wild card of. But I'll say this: let's say you have a bullish opinion of Tesla, and let's say you're retired and you need a little income. I saw somebody saying the other day on CNBC, a technician, and making a good case for Tesla going to way higher. I forget where it's at now, either 200 or 500. And they were looking at the gamma exposure, the dealer gamma exposure, and they were saying people are loading up there. Now it's been pulling back too. Yeah, so it'll be 500. So like if you saw that and you said, no, I'm a big believer, I think Tesla will be at 500 by Christmas, by the end of the quarter. Well, then, and you're retired and you want income, then something like Tesla or TSLP or TSLW, could make some sense. But you also have to really be in love with the stock. So that's what I say. I'm just more in love with indexes, but I appreciate that you watched the max factor. So let's see what else is on there for the folks that didn't watch it. Let's see what else. Where's the orange? Oh, there it is. Okay. So we have GUI, TSLP. I mean, if those guys are right about it going to 500, I mean, this could make sense because it's yielding 38%, even if it doesn't go to 500, even if it, if it misses and it just goes to, and it stays steady, well, at least you'll get the yield. Anyway, then we have Goop, of course, is a good one. And look at Goop compared to GUI. So yield max it's a higher yield. It's a 42% yield compared to 13% yield. So you get more reward with GUI, right? But you also have more risk. Look at the stability. It's only a 45 on stability, whereas Goop is a 53. May not seem like a big difference, but 45 to 53 is about a 20% improvement. Goop is 20% less volatile than GUI. But I can see why GUI's ranked number one because, okay, one's 20% less volatile, but one pays, double the income. And so GUI is a really impressive. It's had a really impressive quarter. TS2 is a good one also. iGold, we looked at that one tonight. Snowy, single stock. Snowy is based on Snowflake. Evidently, Snowflake's on fire. AMDW, AMDW or AMD's been a monster lately. The problem with this one is this right here, stability, 14%. But what you going to do? If you have a bullish opinion in AMD, this is one way to express it. XYLG, this one always gets on here and it shouldn't get on here, but anyway. SLVO, it's not that it's a bad fund, but it's a little bit deceiving. It has a higher yield than it should because it paid a special one-time dividend that I don't think they'll pay again this year. But Silvo's a great one. Look at this. You have stability, you have yield, you have NAV upside. Even after you figure out that you lose 35% of the yield to dividends, even after you figure that out, but and you add in the NAV upside and you factor in the stability, you get a very sustainable type of situation. Gold I, this one you have the same stability. You have the same you have double the stability of Silvo, but you have a little bit less yield, and you don't do as well on NAV either. So I can see why it's ranked a little bit lower, but either one of those could work if you want precious metals exposure. IAUI, we looked at all these tonight. This one, you get pretty good stability, yield, and you get NAV upside. That's a good one. K-Gold. K-Gold's the one that I really like, but I think the reason it's maybe not so stable is I heard Howard Chan on a show, and he was talking about that sometimes, and he used K-Gold as an example. I don't think it's a leveraged fund per se, but he was talking about what they do sometimes is they leverage it up. They buy a synthetic in gold, and they buy 20% more than they otherwise should have because they use leverage, in other words. And so, but then they go out of the money and they sell a 20 delta call. So anyway, so they have 120 deltas long because instead of having 100 from just gold, they buy a few extra options. They leverage it a little bit. So you have 120 positive deltas, meaning if they did sell that call, this thing should go up 20% more than gold and it should go down 20% more. Okay. But what they do, it's a trick. They go out and they sell a 20 delta. So it's a 20 delta call, but you're selling it. So you turn that 20 delta into a negative 20. So you have positive 120 here, and then you have negative 20 here. So the entire position is one. So what he's trying to do is he's trying to create a product that gets the full upside of gold and still gets a yield. Like I say, and I don't think they do that all the time. It's a trade they put on it at certain times, but that it's a technique. But just by looking at the stability, I bet they do that a bunch because, you can see compared to the other gold products, it's riskier. It moves up and down more. Riskier is maybe the wrong word. It's just it's a wilder ride getting there. Let's compare K-Gold to IAUI. Now, K-Gold is about twice as volatile. And let's just see, I bet we can even physically see it. The stability can be overrated. You don't want stability in a bullish market. The ones that are unstable in a runaway bull market are the ones that do the best. They have more upside. But yeah, you can physically see that K-Gold is at least twice as volatile. Look, when the market made a big up move right here in June, just by eyeballing it's easily. And then when the market made a big down move, IAUI dropped from, let's just eyeball it, 11.6 to 11.2. So it dropped 400 on 11. So that's like 3%. Okay. Would you bet this one was about 6 or 7%? Well, we'll see. So it dropped from 12.5 to 11.5. So not quite 11.5, like 11.6. But so that's $900 on 12.5. So that's about 7%. Just like I said, it's literally twice as volatile. Doesn't make it bad. It's just something you should know if you're getting into it. But like I say, after that interview with Howard, it makes sense because he's probably leveraging it up a little bit on occasionally. So, but anyway, let's go back to here. I'm so glad somebody asked about this. I like talking about this stuff. This one's hard to beat. It's as stable as the market. It pays a 22% yield. You know, it has good NAV return. It's sustainable. Once you have to believe in the IWM, which is the Russell 2000, or the Russell 3000. It's based on the Russell. I think it's Russell 2000. Now the Russell 2000 are smaller stocks. A lot of these stocks and a lot of tech stocks in the Qs have a lot of interest. They have a lot of loans, but with interest rates coming down, something like IWM should really benefit. And so like IWM compared to the SPY, S&P 500 are the biggest companies. Yeah, they have loans too, not as much as IWM does. So they aren't going to be as interest rate sensitive. So IWM in a dropping interest rate environment maybe should outperform. But this one, this one looks good. Chippy, I saw somebody talk about Chippy in the comments. Chippy's a good one. TLTW, this is an interest rate play. This is a bullish play on interest rates. TLT are bonds. Bond prices go up when interest rates go down, and that's what's been benefiting this one lately. It's not up a lot, but it's based on bonds, but it's up, and it's paying a 16% yield, and it has 1.5 times the stability of the SPY. It has good sustainability. IWMI is a great one also from NEO. So let's compare IWMI to IWMY or IWMW. This is iShares, I think. So IWMW yields 22%. IWMI yields 14%. So even without knowing anything else, I can tell you IWMI is going to have more NAV upside. Let's go look. Yeah, it had 5% NAV upside, where IWMW had 4% NAV upside. Then we have SVOL. SVOL snuck on here, so I haven't been paying attention to SVOL lately. Some of these ones that get on here when the market pulls back are kind of weirder ones. Like Spin has never been on here before, but it's super stable. And a few months ago, Alti was in the top 10. Misty was Coney, the ones like that. In like July and August, those were in the top 10 and top 20. So we would never see things like SVOL and like Spin, the steadier ones. SVOL may not be an example of steady, but Spin is an example of a steady one that pays a low yield. But, now that the market is, especially Bitcoin's in a bear market, down 20%, and, and this SPX isn't doing great. So these other ones sneak on here, like QYLD and XYLD should be nowhere close to the top 20, but all the high beta single name stocks dropped off the darn list. So that's what happens. Aptly, it's never been in the top 20 before that I could remember. Because it's based on Apple. It's too boring, you know what I'm saying? But it is lately. It definitely is lately. That was a good little recap of that. I appreciate the question. TSYY versus TS2. Yeah, we can look at that, Chad. Let me just make sure I haven't missed anything here. TSII. Yeah, I think that's a good one. I think that's a good one to look at. Okay, so TSYY versus TS2. Have they both been out long enough to be in the max factor? And the answer is yes. And I have a Tesla graphic already made. We did a Tuesday night graphic, but we'll go get the updated results because the market's been all over the place. So let's get the updated results here off this sheet. And we'll just grab them really quick. There's TSYY. I like it so much I put it on there twice. And where's TS2 and TS2? Want to grab another one? Let's grab TSLP. Let's grab TSLW. Let's grab TSLY if we're going to grab them all. All right, let's just look at those really quick. I'm not going to make a graphic. Let's just put them on their own spreadsheet and let's just line them up. Sorry about this delay, but I think we're going to be good as soon as I put this on here and switch it to a table view. Come on. There we go. Okay. So, I mean, yield, of course, is TSYY. Yields twice what TSLY yields, and TSLY yields twice what TSLW yields. I mean, so we know what's going to happen on NAV. Out of those three, TSLW is going to do best on NAV. Sure enough, TSLW is up 4. TSLY is going to be in the middle, of the two. And of course, TSYY is going to be down the most just because of math, just the way it works. Okay, so it still doesn't mean that there might not be a good compromise in here somewhere. But then we have TSLP, which yields about a 20% less than TSLW, and then we have TS2. So really, just looking at them, I'm just looking at them right here. It looks like TS2 is the one. I'm calling the NAV return the same, okay? And TS2 has more yield. So TS2 has definitely had a better quarter. Now, you have to factor in the stability also. TS2 is a little bit less stable. Like I say, the stability works both ways, but a little bit less stable. And actually, when you throw it in all together, the max factor puts TSLP ahead. But they're both good. I mean, you get 30th with one, 44th the other. You get great NAV return with either. You get a little bit more safety with TSLP, but TS2 can work. TSLY can work if you want a higher yield. I mean, it's doing all right. TSLW could work too. I mean, any of these could work. TSYY is just a little bit too wild for me, but really any of the single stock ones are too wild for me. I'm really waiting for Rex, the guys that have TS2, to come out, the fund of funds. I'll buy that the day it comes out. But anyway, there you go, Chad. I hope you like that. TSYY is just like ULTY. NAV doesn't bounce back. I'm DCAing out of TSYY to TS2. Good plan. Max does Tesla Tuesday with great data. Yeah, thank you very much. TS2 and TSLP are hard to beat. I mean, just forget about the max factor. Just look at them and think, look at the yield, look at the return, think about the risk. Yeah, they're. I think either of those could work in a portfolio with the guy that's looking for yield but also safety. Yeah, I'm going to keep the stream going. All right, easy. The perfect combo would be TSYY if it held 725 and all two. Well, those aren't going to hold. That's just because of math. I mean, both of those will go up in an extreme, we saw Alti go it went from 550 to 650, right, in June and July. I mean, it can go up, but the time it was doing that, the Qs being the NASDAQ, which is the closest parent for them, was up like, 4 times that or whatever. You just have to have if the market takes off and does like it does again from April to July, Alti will go back up. But if you look at it over the course of a year, over the course of 2 years, just because of math, its NAV's going to be under pressure. It doesn't mean it's a bad investment. I really like my ULTY. But I will say this, it hasn't been doing great lately. And now that K yield is out, there's some other alternatives out there. So that weren't out there when I bought ULTY, it was the best one there was. And I made 20% in it, 22% or something. So, I mean, I'm fine with it. I think my break even's like $3 or something. I mean, yeah, it's at 5 something, whatever. And then by the time it does drop to $3, I'm going to have more dividends stacked up. And then by then I'll be down to $2. Maybe it'll be free money someday. But anyway, all right. So F1 Mercedes is here. I don't think I've seen you in here before, or if I have, I haven't noticed you. But I appreciate it. So let me go through here and see if there's anything that says max. Once again, I appreciate, Chad, the super chat. That's why you got the special edition you got Tuesday night Tesla early because you gave me a super chat. Anyone else wants to give me a super chat, I'll do one for you too, for your funds. But anyway, we'll cover them. You don't have to give me a super chat. You can give me ideas for days of the week. So what are we going to do for tomorrow? So, we've done, Tuesday nights for single stocks, Thursdays for the SPY, Fridays for the Qs, Saturdays for gold and silver. So we could do, tomorrow night we could do, I think maybe Sunday night we just do a catch-all and I just get all the weird ones like TUGN, the ones that don't really fit into that category. Tuggin's a good fund and it doesn't really fit into a category. And there's lots of funds like that. They're kind of like a one-off type thing. So I think Sunday we'll just have it random Sunday, but then on Monday it can be whatever we want. We were doing Misty Mondays, but then we started doing that on Tuesdays. But maybe we'll do Misty Mondays, and maybe we'll compare Misty, and we'll also look at all the preferred stocks. So yeah, we'll do what we'll do on Monday is Mr. and we'll also do Coinbase. We'll do single stocks that are based on that are in the Bitcoin economy. Then Tuesday will still be Tesla Tuesday, but for that we'll do more like tech stocks, like we'll do Tesla and AMD and Nvidia. So that'll be Tuesday. Tesla Tuesday will have Mr. Monday or Misty Monday. But on that, we can do everything. I tell you who's going to win Misty Monday, Stretch. That Stretch is an incredible fund. I mean, it's a great, incredible fund. And I don't really know much about it. I don't understand how they keep it so steady. Preferred stocks, I know what they are. I mean, I can read, but it's not something I've really studied before. And there's got to be a downside to something that is that steady. But I darn sure haven't found it yet. What do we got going on here? Is the second half just starting? Yeah, I think it's no, it's actually we're midway through the Alabama scored again. Okay, we have 8 minutes left in the third quarter. Alabama's up 17-6. Well, guys, in the absence of any questions, I'm going to get out of here and watch the rest of this game and hang out with Jax. I took Jax on a long walk today. We walked 4.4 miles. And we went up 423 feet and then down like 360 feet. I have a real hilly neighborhood, and we walked up the biggest hill in the neighborhood. The good thing was we jogged the route, but we only jogged the downhill part. It's too steep. It's literally like straight up. We walked on all the flat parts and all the uphills, and Jax isn't in the great shape, but we actually jogged on the downhill parts and we had a blast. It was fun. So anyway, but he's tired and we are going to sleep like babies tonight. I know I sure am. Yeah, the hills in Austin are absolutely wild. Hill country, they call it hill country for a reason. And for some reason, I live in the hilliest part of Austin. There's parts of Austin that remind me of Oklahoma, like over closer to downtown or whatever. They're, they little hills or whatever, but it's basically, a basic city with straight grid or whatever. But you get to a certain part of town and all the streets, it's almost like the Hollywood Hills. Where we walked today, there was houses on stilts built into the side of the hills, or it's like something you see in the outskirts of Denver or something. It's incredible. So anyway, all right, guys. Well, I appreciate you all for being here, and I hope I didn't miss any questions. But in any event, I get that a lot of you guys don't like Yield Max, and you don't have to like Yield Max to be a Max fan. My name Max has nothing to do with Yield Max. I was just thinking of I got into trading options again in 2020, and convexity means something in options. And I was trying to think of a Twitter handle. And so like in 2020, I came up with Max Convexity. And I was tweeting at other option traders. And I was hoping to get their attention and stuff. So, but yeah, that has nothing to do with Yield Max. I like Yield Max, but like I say, I don't think any of these high yield funds are right for somebody that has a job. And I know I get a lot of disagreement from you guys, and that's fine. But I think there's definitely better stuff for people that have jobs. But teach his own. But I do think these things, maybe not Yield Max, but if Yield Max doesn't work, maybe Round Hill does, maybe Curve does, maybe Rex does. There's probably something that works for you. And I really think once you've acquired a little money, you're maybe in your 50s and want to take some early retirement, I think these are a great use case. But like I say, I'm not disparaging anyone that has these in their 25. I know a lot of you guys are 25 or 30. That's fine too. But and I think you guys that are that young, lots of you guys are using the dividends to put into other growth stocks or something. So that could be a good plan. That could definitely be a good plan. But like I say, it's not for me to decide, and it's not my job to tell you and all that kind of good stuff. So, all right, guys. Well, thank you very much. I hope you have a wonderful evening. I'll talk to you tomorrow.